Welcome to another exciting episode of What the FinTech, recorded live from the vibrant heart of Bangkok at Money 2020 Asia. Today we have a very incredible guest speaker joining us. We have Yat Siu from Animoca Brands. Hi Yat Siu, how are you today?
I'm very good. Thank you for having me. It's a real pleasure to be here.
Oh my God, I'm very excited because you are, for me, the Mike Jagger of FinTech, Web3, blockchain. You know, like you are a visionary leader for this. For the people, they just start to listen to this podcast. Can you introduce yourself a bit?
Sure, it's a pleasure. And you know, I wouldn't really call myself Mick Jagger, although that's a great honor. He's a little bit more wild and crazy than me, I think. But yeah, anyway, in any event, my name is Yat. I'm chairman and co-founder of Animoca Brands. We're a company whose mission is to deliver true digital property rights, which basically is something that we think we can only really do through Web3 and blockchain technology. We've known for having made over 450 investments, and most of them being in Web3 games. Mm-hmm. I think we're known for, you know, our ownership of companies like the Sandbox or investments in Axie Infinity, Dapper Labs, Decentraland, you know, Wax, and you know, all these companies that have sort of really made big waves in the NFT space. But we also have invested in, you know, DeFi, lending platforms, anything that helps basically push forward the Web3 ecosystem as a whole. But we're really operators and builders first.
How did you start all this empire ecosystem that you have created with Animoca?
Well, I mean, the origin of this was really started with CryptoKitties back in 2017. Our game studio in Vancouver, Fuel Powered, basically saw and helped them build CryptoKitties. And when that really sort of exploded into the scene, that's actually when we discovered that true digital ownership was something that was truly possible in Web3. And the fascinating thing about CryptoKitties wasn't the fact that it was proof that the internet loved cats. We knew that a long time ago. Was the fact that the supply and the demand of the cats were entirely controlled by the community. So in other words, it was kind of another paradigm of, you know, normally when you think about sort of digital or virtual goods in normal video games, the supply elements are basically controlled by the company, and the entire money system and everything actually is controlled by a central power. But in Web3, those users basically managed the entire economy, and it created a natural sort of flow of its own. And that was actually what was really fascinating. And it also basically gave us a deeper understanding as to all the interesting new business models that we can emerge, and that you could actually really have digital property rights and have true ownership. That was a root of it. That's how we got into it. And then when we saw that a little bit as the next iteration of the internet. So when you think about, well, you know, I was there for Web 1 and Web 2. And I think of Web3 as a little bit like year 2000, 2001 right now. Mm-hmm. So imagine if you could go back in time and you would say, okay, I know how the internet is going to grow. I think I see this future. How would you play it? And we decided that because Web3 is decentralized, you can't control it. In fact, you shouldn't. That would be against its ethos. So that means we have to participate in the network as a whole, which means we have to invest broadly. And that's basically what we did. That's what we have today. I think we're one of the most prolific Web3 investors, and while we're also builders in Web3.
And after the CryptoKitties, did you had any like a venture project, or did you partner with any company and, you know, extend your reach to other like form of investment in NFTs or Web3?
Absolutely. I mean, we first started with Metaverse and games. Mm-hmm. So, you know, obviously with, you know, Dapper Labs, with Sandbox, the acquisition, and of course with our own titles like Rev Racing, and of course our investments in things like Yuga Labs, which is basically the creators of Bored Apes, and a whole myriad of those. I mean, that's one way in which we did the partnerships. But then we also expanded into new areas. For instance, when we acquired TinyTap, we ended up basically supporting the launch of Open Campus, which is powered by EDU. Mm-hmm. And that basically is a framework in which teachers and educators can get empowered with Web3 technology in the same way how artists and musicians were able to start making more money and more fair income with NFTs and Web3 technology. We want to do the same thing for education, because education is a $5 trillion market and has broadly not really been disrupted properly in a real time, and hasn't really been able to empower the very creators of the education sector. Like, we think of teachers as creators in the same way that we think of people who make games as creators or artists as creators. And so we extend it into those areas. But of course, what we also discovered is that Web3 has financial rails in its ecosystem, which means we need to support DeFi. We need to support these protocols. So we ended up becoming a prolific investors in all the protocols, and also in the whole sort of DeFi infrastructure and DeFi applications to help power that network. we think of Web3 like growing an economy. It's like building a nation. Well, in a nation, you need all these little pieces that help put it together. It's not one product or one company. And that's basically how we think of Animoca, as kind of an ecosystem builder and investor.
Yeah, definitely. We can see this with all the news that you have. Like I'm following your journey for a couple of years. It's very impressive what you have done. But how, if you reflect on yourself or reflect on the company, how do you create that kind of ecosystems? Did you have a strategic vision of what you want to develop phase by phase, or do you think?
No, we didn't do it that way. What we did was, we basically have this principle at Animoca Brands that we're building and sharing in the same network. Mm-hmm. Right? So in other words, in Web3, there are, we believe, very natural anti-monopolistic qualities. Because when you build in a common chain that basically is interoperable with other chains, you don't control the network effects exclusively. Right? In Web2, companies like Facebook or Twitter or Apple, they build within a closed ecosystem. They control the network effects. And you can only access these network effects with permission, right? So you get an API, you become a developer, you get the SDK. Like those are ways in which you can partake in the network. But the dominion and control of that network really, really belongs to the platform. But in Web3, it's open, it's on chain, which means also that all the customer data or the way they can reach a customer is also entirely on chain. So you can't build a monopoly in Web3. We don't think that's possible. So that means that in order to sort of grow in that space, we have to partake and invest in all the networks. And of course, that doesn't mean we have to invest in every single project in the world. But it does mean that if you're more exposed to the network, you should broadly benefit from the network more. But even if, and we see this in Web3 gaming, when Axie Infinity became really big in 21, 22, it wasn't only Axie Infinity that benefited. Actually, every other Web3 game started to benefit because liquidity was shared. So even though the assets couldn't transfer one game to the other at that time, if people made money in Axie, they could sell their assets or they could sell, whatever they were creating, and they could buy another game and they could move it somewhere else in the ecosystem. And sometimes they wouldn't just buy games, they would buy other things, meaning like an economy, like a nation. Mm-hmm. When someone makes money, or has a nice bonus at the end of the month or end of the year, well, he spends more money in the economy. Maybe he buys a nicer house. Maybe he spends more money on food. Maybe he buys some jewelry. Whatever that is, they spend more. That's kind of the effect you have in Web3. Whereas in Web2, all the effects are contained by themselves. Mm-hmm. Right? If you make more money in your particular Web2 environment, they want to lock the value in that ecosystem, which basically also doesn't help it grow. Right? So that's sort of the difference. And so when we think about the markets, we look at which sectors end up actually, the thesis is building digital property rights. So we think of everything that helps shape that space. But for instance, we couldn't have known when we first entered in 2017, 2018, that it needed DeFi to accelerate. DeFi summer really came in 2020 and sort of came to full bloom in 21. And it wasn't really until then that we came to realize how important DeFi was to the growth of digital property and NFTs, right? So it's an evolution that we always have to navigate. This space changes so rapidly, in both good and bad ways, that we have to navigate with fluidity.
How do you adapt to this? Because you mentioned about NFT, Metaverse, DeFi. Every year we have like new buzzword. Last year was Gen AI. Now we speak about like the next step of AI as well. But for you, because you have like that entire ecosystems, how do you adapt to NFT, Metaverse, like every wave of new technology, of new projects?
Well, first we have a principle, right? And the principle is digital property rights, which means that as a root you have property rights, mm-hmm. and that means you have ability to compose on top of it. So that's the principle. If that principle is wrong, everything we do is wrong, right? Okay. But assuming that principle is right, which so far it seems to be, then every component of business attaches to that thesis, right? If you can truly give property ownership, digital property ownership, to an end user, they will be empowered to do certain things. Then we can invest in those businesses that can help empower them. Now, for instance, a lot of people declared NFTs dead last year. But today, NFTs are still selling about $1 to $1.5 billion a month. So I say it's doing pretty well as an example of an industry, but it's not talked about as much. And while the use cases have grown, many of the use cases that were true back in 2020 and 21 are still true today, right? Meaning that people own them for social status, that people own them for gaming utility, that people might own them for metaverse land, right? And maybe the values in some of the projects are lower than they were before, but they're still valuable, right? And they're still tradable, and they still basically have sort of a value to society and to the communities in Web3. So you can see that maybe some of the novelty of it may have gone away, as most products and services do. Like, when the internet first came out it really sort of made a big splash in the dot-com boom back in 98 and 99. Everyone talked about it. And I remember we made fun of things like, pet.com and all that kind of stuff. And because, and then afterwards when it all collapsed, everyone's like, well, nobody's ever going to buy, their pet stuff and their grocery stuff online. And now look where we are today, right? The utility, of course, is exactly as we all predicted, except that it's not as hyped anymore. The number of users that are using the internet today are way, way bigger than they were in 98 and 99. But again, the vision of seeing it through is still the same. And that's kind of what's happening right now. So NFTs, especially in places like Asia, are growing. And more gaming projects and more companies are launching them and making money from them and creating businesses and opportunities.
When we speak about Web3, DeFi, especially Web3, I'm very passionate about one subject is how you engage the community. I'm a big fan of Japanese anime and manga, for example. I follow like some of the mangaka at the early stage, and it's the same for the footballers. I see. How do you, the platforms here, sometimes connect the emotion to a player, to an artist.
Yes.
How do you leverage on this to create the next phase of product?
So to me, actually, this is one of the superpowers of Web3. The superpower of Web3 is that you can actually create a real engaged relationship with, I think what Kevin Kelly most famously said is your 1,000 true fans, right? Mm-hmm. His statement was, I think back when he was at Wired, was the internet allowed you to create a relationship with your 1,000 true fans. And if they paid you $100 a year, that's $100,000. Mm-hmm. That seems like a pretty good, like income for most people. So how do you get to 1,000 true fans? Well, the challenge we have in Web 2 is you don't know who your 1,000 true fans are. Because you might have 1 million followers on Spotify. You have no idea who your 1,000 true fans are. You don't know which follower listens to your music 10,000 times. You know just in general how many times it's listened to. You don't know whether it's someone you really like. Now imagine what our industries in the physical world would look like if we didn't know who our 1,000 true fans were. That means a restaurant would have no idea who their customers are. It would just randomly just sort of have people come in. It means that luxury companies wouldn't actually be able to service their customers properly because they'd have no idea which customer actually buys, spends $100,000 a year versus those that buy, basically just walk into the store and have a look, right? And so that's the world of Web 2 we live in. We don't have a relationship with 1,000 true fans. Who owns those fans is actually the platform. So actually Facebook knows who goes to your page 1,000 times. Actually Facebook knows how much they probably even spent on your products and services. You don't really know that. But in Web 3, because you're building on chain, you actually now have the ability to track that publicly. You can say, oh, this person bought $10,000 worth of my NFTs. Gotta take you seriously. And so as a result of that, you can actually build and truly engage. And you see this today when you think about things like, for instance, when they do airdrops, which is basically kind of a reverse marketing campaign, or when they basically provide benefits, they can give you the benefit directly to someone who owns Land and Sandbox or someone who owns Bored Apes, because he's a real customer. If you're a marketing agency and you want to reach a true Rolex owner, not someone who follows a Rolex page, how much is that Rolex user worth to you? It's a lot, right? You see people spend money on these soirees, on expensive dinners. That expensive dinner is hundreds of US dollars per customer that comes in or more, right? But in Web3, now you can directly go to that person because he can prove to the ownership of the NFT that actually he's that real customer. And to me, this is something, because it's on chain, everyone can do this, which means it's like a marketplace. So I actually think advertising will be completely flipped upside down. And also the person who owns the assets will now have a bigger reason to own them because his social status, which is why people own these assets, becomes amplified to value. Instead of paying so much money to an ad agency to try to reach you, he might just give you that value directly because he knows that you truly own the asset and you can prove that. Again, only on-chain can do this at scale. So I think this is, one of the big benefits of how you can have true fan engagements. If you are a musician, for instance, how do you reach out to your 1,000 or 10,000 true fans who will come to every concert, who will buy everything you do, who will just love you, right? Those are the customers you want to engage. The millions of other people who follow you and listen to your music once or twice, they're nice, but they're not going to propel your business. They're not as engaged. They're not invested in you. And with Web3, ownership like NFTs make you a stakeholder in the network, which means that the fan isn't only just there to serve you, he actually grows with you. And I think that's what's really powerful. And I think that's what artists really want, the creators really want, is to have a really engaged relationship in which both sides can benefit.
It's definitely something I heard before. So, for example, I met some of the artists doing NFT art at the Hong Kong Digital Art Fair, for example, and they mentioned that they have a full-time job. On the side, they are an artist. And before, when they were selling their art, they didn't know to who they sell it. And now they know which person have it, and they can engage with them, and they can understand what they like about it. Do you agree with this as well?
Absolutely. I think when you think about some of the NFT collections, like, when Ape Fest was in Hong Kong, I think a lot of people were just like blown away at the fact that thousands of people from around the world who've never been to Hong Kong will travel all the way to Hong Kong to basically sort of be there because they have a Bored Ape and they want to connect with other apes. But here's, I think, what's even more wild, which is that these NFT and the ownership of the NFTs have given people a kind of shared identity in a shared network in which the proof of that ownership creates much stronger bonds. And we see this in the physical world. Like you talked about sports earlier today, right? All the people who basically go to, like a football match or a basketball match, there's a common thing that connects you. And, it's a vision and the hope of the team doing well. But the kind of pride you have on the success of that team is akin to patriotism and nationalism, right? It's a sense of your social identity. It's formed around that. And within those networks, you actually have a way in which you can sort of create deeper connections because these stories that they tell are actually ones that resonate with us. But you want to know if he's a real fan or if he's not a real fan. And you can only know that if they actually sort of are invested in it. And so what you see with NFTs, right, if I'm an NFT artist and I actually purchase this art, not only do I demonstrate that I paid this money, I also demonstrate how long I owned it. I also demonstrate what I've done with it, right? So the whole world essentially knows whether you love this person or you don't, whether you only traded it or whether you actually have loyalty attached to it. And then you can build those relationships. So again, on-chain activity is on-chain proof of who you are and what you do. And again, it provides us so many tools to build better relationships.
I listened to some of your, intervention, interviews, videos as well. One of the things I've seen is like you're very passionate about the impact of, DeFi into the developing country and emerging markets.
Yes.
This morning we could discuss together. You spoke about the Philippines and other markets as well. What for you? What is the vision? What will happen soon on this country, or what is happening already, and people don't capture the?
Yeah, I think there's a broader picture, but let me first talk about what's happening in the developing countries. Places like Philippines or places in Latin America, whether it's Venezuela or Colombia or so on. Web3 has given them financial inclusion. When you think about the majority of people in these countries, they don't have a bank account. They can't because they make $5 or $10 a month. It's really hard to have a bank account. And also, they don't have access to global, financial assets of any kind. Again, it's sort of they're being excluded. But in Web3, which is essentially on blockchain, it's global. And by having simply a wallet, you can now participate in these financial ecosystems at a fraction of the cost. And all you need to do is essentially have digital assets. And you can also earn digital assets. I mean, that's what's happening with games like Pixels and Axie Infinity, where you can see the impact it's had, in places like the Philippines, where people are now making a real sort of living wage from playing these games. What they're really doing is enhancing the network effect that then gives us revenue and benefits, right? Like I think a lot of times people find it strange because they don't understand how value is formed. But every time a person posts photos on Instagram, he's actually making money for Instagram. It's just that people don't know how to translate that because it becomes data, and then data becomes network effects, and then they sell it to you back in the form of advertising. But you don't see that flow. You don't see that your data contributes value. Also, you don't know how much your value is created. Like, for instance, maybe I create $1,000 of value for Instagram. Some other person might create $10,000 of value on Instagram. We don't know what that is. We can only assume. And so we don't get our fair share. But in Web3, we can track that because it's on-chain. So I can say, hey, you're a more valuable user, so let me go and pay you more for that. Not just because I think it's great, but also because it creates both a better incentive to do so. So that's sort of one of the powerful elements about how we can sort of create more financial inclusion from that. But I think the other thing that I think Web3 will do broadly for the world, not just for developing countries, is it creates more financial literacy. So I think most of the people in the world who have a bank account don't actually have financial literacy. They don't actually understand money. So as a consequence, they're not investing, they're not growing their capital base. And in Web3, anytime you're involved, you basically become a capital owner of some form or the other, which means that you're forced to basically understand more about financial systems. And I think this is going to be the bigger impact. I think if Web3 onboards, billions of people, as we hope it will, then we will also have 1 billion people who will have increased financial literacy, because that is the nature of Web3.
We see also a lot of cycles in terms of investment and disinvestment from some companies like Meta, Google, Amazon, or others. Do you see now a new shift because in 2024, like the different cryptocurrency price rise up again? We see more interest, more project coming back.
Yeah. So first of all, companies like Meta and Google, I would say, and especially and also a number of VCs, I consider them more like Web3 tourists, right? So they kind of come in, check it out, and say, "Oh, that's exciting," and then when the market didn't do so well, they're like, "Okay, fine, we're gone," right? And that, by the way, is very typical. That's not just those companies. It's like, everyone who doesn't have the conviction will probably take more of that temporary view. But for those, companies that have actually had the conviction, companies like ours, but many others like ours in Web3, continue to build an area, obviously benefited from its growth. And I think at this point, to me, the opportunity, very similar to the early days of the internet or the beginnings of AI or mobile gaming industry, for instance, really, I think, belongs to new companies emerging in the space. Because innovation is disruptive. And it's very, very hard for existing companies to disrupt themselves. It rarely, if ever, happens, right? It's a classic sort of innovator's dilemma, as it was famously put by Clay Christensen. I think it's this challenge that existing companies have existing revenue streams to protect. And so they have got inherent antibodies in their own organizational structure that don't allow for the kind of disruptive innovation that's needed. And so consequently, innovation happens on the fringe, which means that they're typically startups or new companies that are not held back by old incumbent structures. So I think the same will ultimately happen here. I don't think when it comes to Web3 and the open metaverse that companies like Facebook or Google are going to be as relevant in those areas as they were in the Web2 era, unless they completely disrupt themselves, which usually comes when there's a time of crisis, like as in they'll be forced to do it, not because they had a strategy to do it. And I think this will happen. I think one of the reasons why people looked critically at the metaverse, especially last year, was they interpreted Meta, as in Facebook, as the metaverse. Mm-hmm. And I think when sort of Facebook's version of the metaverse was not doing well, they just assumed all of metaverse was not doing well, which is completely not true. Like if you look at the Web3 space, which is, $2.7 trillion market now, is in terms of market value, is clearly, growing much faster than almost any other sector I can think of.
Interesting, very interesting. Because of your company and all the projects you're working on, you work with many industries, right? For me, I'm a banker, so I will just focus on financial industry. But do you think like the Web3 and DeFi will impact all the industry across, like hospitality, finance, traveling?
Yes, absolutely. Every industry will be impacted by Web3. One of the things that excites us about Web3 is because of digital property rights, it has the ability to capitalize any intellectual property, tangible, intangible, of any kind, on-chain. Which means that something that is maybe only making $5 or $10 of value annually can now become a capital asset. And someone, might sell it for 5 or 10x the price for someone who wants to create sort of, a different kind of yield, for instance, right? Before, you couldn't really do this because you could only do it for assets that made a certain amount of yield, a certain kind of return. So if you make $100,000 a year on a product or service that you've created, then maybe you can turn that into a capital asset because there's some forward value, maybe $500,000, $1 million. And when you consider the cost of the lawyer, the contracts, the legal structuring, it might be worth it. But if it makes $5 or $10 a year, it's not worth it, right? You're just not going to do that, which means you don't really have any intellectual property rights and intellectual property protection for the lesser value items, which basically then become, financially sort of don't have the ability to form network effects, which basically Web3 basically empowers. So we think, the entire market will grow because we will have everything that sort of is represented through our digital time, through our data that we create, through the assets we produce, through the creative things that we do, will all essentially be on chain and protected on chain, and with the ability to create value from them, which I think is what's happened in the physical world for physical property rights, and I think it will completely revolutionize financial inclusion, financial value creation. Let me give you an example in the gaming industry. In gaming, we spend over $100 billion a year on virtual goods that are not owned by the gamers. They're rented objects. But you know them in forms of skins or items, artifacts, and things that you play inside your games. But it's $100 billion of rental goods. Imagine what happens when those rental goods actually become assets that someone can actually own. Well, then what they're going to do is they're going to maybe sell it for the future value of it, which means you could maybe have 5 or 10x the kind of value, which is the reason, by the way, NFTs are much more valuable than the digital art counterparts because that are not on chain, because you don't have the ability to build financial network effects. Everything in Web3 is connected financially because when you build on chain, the financial layer is structured right at the same level as your transactional, your gaming, your entertainment layer. They're all embedded, which means that every service will have this financial network effect capability that didn't exist before. Like in Web2 or in other businesses, they're differentiated. You might build the best game, but the financial system is not embedded. It's embedded very clumsily through an SDK or an API that gives you only a little bit of access in which you can tap into the financial ecosystem, mostly just for payment. That's it. That's the only function. But on chain games in Web3, all of the financial systems are exposed for third parties to compose on. Right? So it's not you doing it, someone else will do it. And I think this is the other magic. When you build on chain, it's anyone who can add new value on top of it without seeking permission because it's permissionless.
Also, so a lot of initiatives you are doing with Animoca to onboard new project, new entrepreneurs, new companies through accelerators, or also through your ecosystem.
Yeah.
Could you share a bit more about it? How do you do it, and how people can reach out to you?
So we have a number of funds we invested in that basically have helped us get more market exposure. We have our own venture fund, which is a small scout fund that goes up to Series A typically. We have the accelerator at the brink, as I mentioned to you as well. And of course, we invest out of balance sheet. And so we typically encourage everyone in the space to come to our events or to come reach out to us, and we'll then try to direct it to the right companies or the right individuals to help sort of propel that project further. The vision stays the same, which is true digital property rights. We really believe that at the end of the day, when we can give people digital property rights, then we will also basically provide a better framework for capitalism. And that actually, I think, is the key in all of us of what we're doing, because I think capitalism is the engine of growth. And a lot of people are not included in the current financial system, in the current capitalist framework. But in Web3, we can include everyone. And I think, again, we look for companies that share in our ethos as well. So if you believe in the shared network, and if you believe, as we do, that we can create a better capitalist framework through stakeholder capitalism in Web3, then I think you might be the right partners for us.
And if people want to know more about you, about the company, how can they reach out, or how can they follow? Twitter?
Yeah, I think our Twitter account, my Twitter account, YSU, YSIU, or the Animoca Brands, for instance, are easy ones to follow. That's probably where you get, let's call it the sort of hot takes. But if you want to know more, you have a Medium blog, we have a website, animocabrands.com. Come check us out, and you can basically find all sorts of materials about how we think and do stuff over there.
Perfect. Thank you very much, Yat Siu. We are already at the end of this interview. It was an honor for me and a great pleasure to have you here.
Thank you for having me.
Thank you very much.